Hello guys, welcome back to my channel. My name is Andrea, and today I would like to share with you my thoughts about a company not many people are speaking about, and the company name is Illumina. Before we go any further, please know that I'm not a financial advisor and you should always consult with professional before investing in anything. So Illumina was now on my watch list for a while, and the last weeks I was digging deeper in the company, and here is my brief overview of this company in a nutshell. So what does Illumina do? Illumina produce machines or devices. They can analyze human DNA, cells, and similar things. So devices they can make with this analysis, they can diagnose cancer or other sicknesses in the very early stage, and so on. And they are active worldwide. So they have a free platforms, free type of devices. The Novasec is like their flagship, and then the MiSec and NextSec, which are like a mid-range and a low-range devices, if we can call it like this. What I find interesting on this company is that 72% of their revenues come from consumables. So they sell devices on some research institute or research laboratory, and when they have this device, then they must order the liquids and reactants and things they need for the analysis. They need to order this from Illumina. So some people call this laser razor and blade model. So like if you buy a specific razor, then you also need to buy the specific blade that fits this razor. Yeah, and so they have a long-term customer relations. It's like a subscription model basically, because the laboratories don't get so easy the opportunity to buy new devices. I look on their free cash flow for the last 5 years, and as we can see here, it wasn't very stable. The reason for this is that they make a big investments, capital expenditures in the past. If we take the free cash flow, what was reported for the last year in their annual report, price to free cash flow will be around 11, which indicates that the stock is potentially undervalued. They also reported almost 2 billion in the total debt, and from this 500 millions will be due within the next 12 months. Then they also provide this overview when the debts come due and in which interest rate they are paying on it. So if they will not, if we look on the free cash flow, if they will not invest as crazy and nothing unexpected will happen, they can manage this. So it's not concern for me right now. They had also now some new interesting products they launch on the market. If you wanna me to tell you more about this, just let me know in comments and maybe I can make a deep dive. And they also improve their non-GAAP operating margins, which I find positive. And the aging population, personalized medicine, and increased use of genomics can be a good tailwind, a long-term tailwind for them. Now the cons about this company. So in the beginning of March, they was banned from China, and this was after they published their last earnings. So on their earnings, there was commented that it is possible that they will be banned, and which was on the February, and on the beginning of March they was banned due to the unwinding trade war. And China was making 7% of their revenue, which was it's quite a lot, I think, for one country. And in China there is some company who do similar devices, even if they are not as good. It's not like that China is now cut off from this technology. So I don't know when and if they will be allowed to go back. In the US, they have some problem with their acquisition of Cryle. We don't know how this will evolve. They also provided a weak outlook because they think that research labs will now need to spend less money. But nevertheless, it's a single-digit revenue growth, low single-digit. They have also competition. The most known brands, at least to me, is Thermo Fisher, Oxford Nanopore. They don't have devices that are as good, or say it differently, the devices from competitions are not as fast. So with Illumina devices you can make much more samples in the same time. The stock has been quite volatile. If we look on the stock chart, it just look bad. There is a significant downtrend. And even there are some good analysts that they are projecting the price around $150, $120, $150. So the stock looks like undervalued right now, but due to the market conditions, most of them rate this company as a hold right now. They have also they are capital intensive business. They had a quite a big capex cycle in the last years, and they need to invest a lot into research and development to stay on the top of their competition. So let's sum it up. I don't own Illumina right now. It's on my watch list. I would like to buy it because I think that with their partnership with NVIDIA they made, they are investing in the artificial intelligence to make their analysis even faster and better. They can profit from this trend. But due to the current market conditions, I think there is a big chance that this stock can fall even further, and then I will probably buy if I wouldn't find any argument that would speak against it. I don't think that in the current market condition the stock will rise in the next few weeks, and for me it will be also a long-term investment, so it's not like a trade. I am expecting if I buy this company I will hold it for more years. So take it for what it's worth. Not a financial advice, of course. Let me know in the comments what do you think about the Illumina, and have a nice day. Bye.